Here we're going to take a look at analyzing some transactions, some basic transactions. And here we have in front of us the Analyzing Transactions Part 1 sheet. This also might say Analyzing Transactions Chapter 2 on it, but it would be the same thing. Let's first take a look at a transaction where the business is purchasing some equipment and the business is using its own cash. So let's say we have a cookie baking business, and the cookie baking business already has its own checking account, and it wants to go out and purchase an oven for baking cookies. The first thing we have to do is say what happened. And just as we said before, accounting transactions are at the very heart where you have a give up which is equal to what you are receiving. And so we want to put in the most basic terms of English what is being given up here and what are we receiving. And you need to look from the eyes of the business, not from the eyes of the owner. And so the business in this case is receiving a cookie oven. What is the business giving up? Well, they're giving up cash. Whenever we use the word cash for a business, we're talking about the checking account. So they wrote a check, and so they're giving up their cash and they're receiving a cookie oven. This is the basics of what is being received and given up. Now I have to determine which accounts I'm going to use, and I have to use an account for the give up that matches what I said I was giving up. So I need an account for cash. Now here's where you have to look at chart of accounts. Every company has its own chart of accounts, and you can use a substitute chart of accounts, which I had in shared files. If you happen to have a homework problem that doesn't have a chart of accounts on it. So if we were to look at a chart of accounts for this cookie business, we would see that they had some assets, some liabilities, some owner's equity accounts. Now, they're giving up cash. Cash is something that the business owns, and so therefore on the chart of accounts I would look under assets. And generally there is an account called cash, which is the very first account on the chart of accounts. And it is an asset, so I put an A and I circle it. Okay, now I need an account from the chart of accounts for the receive, and I have to make sure that I don't mix these up and put the account for the give up onto the receive line, because later on that's going to end up causing us problems. So it has to match. So now I need an account for the cookie oven. And so if I take a look at the chart of accounts, under, again, the cookie oven is something the business owns, and so I need an asset. If I look at the assets, I'm going to usually find something called equipment. It might be different type of equipment. It might be, they might have delivery equipment, or they might have, in this case, baking equipment, computer equipment, transportation equipment, whatever, or they might just use the word equipment. Each company has its own chart of accounts. You must use that chart of accounts if you are given one. Only if, in case of a homework problem that doesn't give you a chart of accounts, then you can just use a substitute chart of account. So I'm using the substitute chart of accounts since we don't have one for this company, and it would just have an account called equipment. Equipment are things that the business buys that it's going to use for years. I did not choose supplies for this particular account for the cookie oven because supplies are things that we use in a fairly short-term basis. Alright, now we have to go to question 3, which is how is the equation affected? And we need to look at the increase or decrease for both the give up and the receive. In other words, sometimes I see some students, they just say the transaction increased or this transaction decreased. No, the transaction is always equal. The transaction always balances. Okay, but each item within the transaction might increase or decrease. We have to look up at the two separate parts. So I look up here, back at the beginning, and I say, do we have more or less cash than we had before? Well, we had to write a check out. We now have less cash in the checking account. Now I'm asking the question up here at the top, but I'm going to put my answer down here where the account is. So I'm going to put a minus sign next to the cash because we have less cash than we did 5 minutes ago. Then I go back to the top and I say, do we have more or less cookie ovens than we had 5 minutes ago? Well, 5 minutes ago I didn't have any cookie ovens. Now I have one, so I have more cookie ovens. So I go back down to where equipment is and put a plus. Now the last question is, does the equation balance? And here I am going to put under my equation whatever pluses and minuses I have. So I have a plus of assets, so I'm going to put a plus here. And I also have a minus of assets, so I'm also going to have a minus under assets. Now if I add and subtract a 2, it's going to equal 0. If I add and subtract 20, it's going to equal 0. If I add and subtract 253,000, it's going to be a 0. So whatever number this is, if I have an add and a subtract of the same number, it is going to equal 0. So I have 0 on the left side of the equation. I have nothing on the right side of the equation. So it is 0. 0 equals 0. I only have 3 options. I can say plus equals plus, have a plus on the left side and a plus on the right side of the equation, or I can have a minus equals minus, or I can have 0 equals 0. Those are your only 3 options. If you end up with a plus equals minus, you have done something wrong, and your equation doesn't balance, and you need to go back and fix it.